What happens to your income if you stop working for 3 months? It goes to zero, right? Now imagine you own a rental property. What happens to that income if you stop working for 3 months? It keeps coming, every single month, whether you're on a beach, in a hospital bed, or just sleeping in on a Tuesday. Here's what nobody tells you. Your job isn't building wealth, it's preventing poverty. There's a massive difference, and understanding it is the line between spending your entire life on a treadmill and actually building something that lasts. Most people will work 40 years and end up with nothing but memories of time they can't get back. And it's not because they didn't work hard enough, it's because they fundamentally misunderstand what creates wealth. What's up, everyone? I'm Billy. The system is designed to keep you running in place, working harder, longer, for money that disappears as fast as it comes in. But there's a completely different game happening that most people never even see. If you've ever felt like you're doing everything right but still can't get ahead, or if you're tired of trading your time for money with nothing to show for it, this video is going to flip your entire perspective. Hit subscribe if you're ready to understand how wealth actually works, and let's break down why your job will never make you rich and what will. Here's the fundamental problem with a job. It's a direct time for money exchange. You work an hour, you get paid for an hour. You don't work, you don't get paid. Think of it like a treadmill. When you're on that treadmill running, you're burning calories. The second you step off, nothing, zero. You only get results while you're actively doing the work. Now think about muscle. Muscle burns calories 24/7, even while you're sleeping, sitting on the couch, doing absolutely nothing. Build enough muscle and your body becomes a passive calorie-burning machine. A job is the treadmill. Assets are the muscle. And here's the trap. Your job has a hard ceiling. There are only 24 hours in a day. Even if you're making $100 an hour, which most people aren't, you max out at $2,400 a day if you somehow worked every single hour without sleeping. But you can't. Realistically, you're capped at maybe $200,000 to $300,000 a year for high earners, and that's if you sacrifice everything, your health, your relationships, your sanity. Assets? They have no ceiling. A rental property generates income whether you own 1 or 20. A stock portfolio grows whether it's $10,000 or $10 million. Your income isn't tied to your time, it's tied to what you own. Every hour you spend working for someone else is an hour you're building their wealth, not yours. Your labor creates value that they capture while you get a fraction back as a paycheck. Here's where it gets really interesting, and this is the part that blew my mind when I first understood it. The entire financial system is designed to acquire assets, not to help you work more hours. Try this. Walk into a bank and say, "I'd like to borrow $100,000 so I can work more hours." They'll laugh you out of the building. There's no such thing as a loan to work harder at your job. But walk into that same bank and say, "I'd like to borrow $160,000 to buy a $200,000 rental property," and suddenly they're rolling out the red carpet. Why? Because the bank understands something most people don't. Assets create wealth. Labor doesn't. This is called leverage, and it's the single most powerful wealth-building tool available to regular people. Let's say you have $40,000 saved. If you keep working your job, that $40,000 just sits there, maybe earning 4% in a high-yield savings account, about $1,600 a year. But use that $40,000 as a down payment on a $200,000 rental property, and now you control an asset worth 5 times what you actually had. If that property generates $1,500 a month in rent, and your mortgage and expenses are $1,100, you're cash flowing $400 a month, $4,800 a year. Plus, your tenant is paying down your mortgage. Plus, the property is likely appreciating. You just turned $40,000 into control of a $200,000 asset that's generating income, building equity, and appreciating all at the same time. That's leverage. That's what the wealthy understand that employees don't. The system will loan you money to buy assets. It will never loan you money to trade more of your time. Think about what that tells you about which path actually builds wealth. Let's talk about something that makes most people's eyes glaze over but costs them hundreds of thousands of dollars over a lifetime: taxes. When you earn money from a job, the government takes their cut first. Before you even see your paycheck, federal taxes, state taxes, Social Security, Medicare, all of it comes out. If you make $70,000, you might take home $52,000 after taxes. You're taxed on every dollar at your highest marginal rate, and you have almost no deductions available. Now let's talk about asset income. If you own that rental property generating $4,800 a year in cash flow, here's what happens. You get to deduct your mortgage interest, property taxes, insurance, maintenance, and here's the big one: depreciation. The IRS lets you write off the theoretical wear and tear on the property, even though it's probably going up in value. On paper, your rental might show a loss even though cash is hitting your bank account every month. That loss can offset your other income. You might pay $0 on that $4,800 in cash flow, or even reduce your overall tax burden. When you sell an asset, you pay capital gains tax, which is typically 15 to 20%, way lower than ordinary income tax rates. And there are strategies like 1031 exchanges that let you defer those taxes indefinitely by rolling your gains into another property. The tax code is written to reward ownership and punish labor. That's not a conspiracy theory, it's explicit policy. The government wants people to invest, to build businesses, to own real estate, because those activities create economic growth and jobs. Your job income is the most heavily taxed money you'll ever make. Asset income is the least taxed. Again, what does that tell you about which path the system is designed to reward? Here's something that keeps me up at night. Inflation is a silent wealth destroyer, and if all you have is a job, you're getting crushed by inflation without even realizing it. Let's say you're making $60,000 a year. With 3% annual inflation, which is actually low by recent standards, the purchasing power of that $60,000 drops every single year. In 10 years, you'd need to be making $80,600 just to maintain the same lifestyle. Do most people get 3% raises every year? No. And even if you do, you're just running in place, not getting ahead. Now, here's what happens with assets. You buy a rental property with a fixed-rate mortgage. Let's say your mortgage payment is $1,400 a month, and you're charging $1,800 in rent. Your cash flow is $400 a month. Inflation hits. Rents go up 3% a year. In 5 years, you're charging $2,085 in rent. Your mortgage? Still $1,400. It never changes. Your cash flow just went from $400 to $685. Inflation made you wealthier. And the property value? That's probably going up too. Real estate typically appreciates at or above inflation. Your $200,000 property might be worth $230,000 in 5 years, while the debt you owe is being paid down by your tenant and eroded by inflation. Inflation destroys jobs and feeds assets. If all you have is income from work, inflation is eating your lunch every single day. If you own appreciating assets, inflation is working for you. Here's the ultimate difference between a job and assets, and it's the most important one. What happens when you're done? When you stop working your job, whether you quit, get fired, retire, or physically can't work anymore, the income stops immediately. After 30 years of work, you have nothing. No ongoing income, no residual value, nothing to sell or pass on, just whatever you managed to save along the way. Your job has zero resale value. You can't sell your job to someone else and retire on the proceeds. You can't pass your job to your kids. The day you stop, it's over. Assets are completely different. That rental property, you can sell it and pocket the equity. You can keep it and pass it to your children so they start their adult lives with income-producing assets instead of debt. You can 1031 exchange it into a bigger property. You can refinance and pull out cash without selling. Even while you own it, it's building equity and generating cash flow that doesn't require your active involvement. You're building something that exists independent of your ability to show up and work. A business is the same way. Build it right and you can sell it for a multiple of earnings. Someone else pays you years of future income up front and you walk away with a lump sum. The wealthy don't work for 40 years and then hope they saved enough. They build assets that generate income indefinitely and eventually sell those assets or pass them on. Their wealth doesn't evaporate when they stop working. It continues to compound. Now, here's where I need to be clear. I'm not saying quit your job tomorrow. That's not the point, and it would be stupid advice. Your job is the seed capital. It's how you save the money to buy your first asset. The goal isn't to eliminate work. It's to change what kind of work you're doing. Here's the path. Use your job to live below your means and accumulate capital. Take that capital and buy your first cash-flowing asset, a rental property, a dividend stock portfolio, a small business.
Whatever fits your situation and skill set. Use the income from that asset, plus continued savings from your job, to buy another asset, then another. Each asset you acquire reduces your dependence on your job. Eventually, your asset income exceeds your expenses. At that point, your job becomes optional, not because you stopped working, but because you changed what you own. The goal isn't retirement. The goal is sovereignty. The ability to choose what you do with your time because your assets cover your life whether you work or not.
Most people spend 40 years building wealth for their employer, their landlord, their bank, everyone except themselves. The reason is simple. Nobody teaches you this. The school system doesn't teach you asset accumulation. It teaches you to be a good employee. But once you see the difference between trading time for money and owning things that generate money, you can't unsee it. Every paycheck becomes seed capital. Every expense becomes a question. Is this getting me closer to owning assets, or is it just consumption?
Here's the brutal truth. You will never, ever work your way to wealth. You can only own your way there. Your job is a treadmill. Muscle is assets. One requires constant effort just to maintain. The other works for you around the clock, growing stronger over time. The system loans you money to buy assets, but not to work more hours. The tax code rewards asset ownership and punishes labor. Inflation erodes paychecks and feeds assets. And when you're done working, your job disappears while assets remain. This isn't theory. This is how every wealthy person you've ever heard of built their wealth. They stopped trading time for money and started acquiring things that produce money. So calculate how much you need to save for your first asset. Make a plan. Cut your expenses if you need to. Increase your income if you can. But understand that the saving is just step one. The wealth happens when you deploy that capital into something that works while you sleep. If this video changed how you see your job and your money, hit that like button and subscribe for more content that breaks down how wealth actually works. Drop a comment and tell me, what's the first asset you're going to buy? I'll see you in the next video.